Welcome to the deep dive. We cut through the noise, dig into the data, and give you the key insights you need fast. Today, we're diving deep into Liquidity Services Inc. That's ticker symbol LQADT, a company in a really fascinating and increasingly vital space.
That's right. LQDT is all about surplus asset management.
Yeah.
Think about it. Businesses, government agencies, they always have stuff they need to get rid of. Excess inventory, maybe returned goods, used equipment.
Right.
LQDT steps in, manages that process, and resells those assets. It's basically turning potential waste back into value. It's a pretty critical service these days.
Exactly. And our mission here is to give you, our listener, especially if you're an American investor looking at these kinds of unique plays, a really clear picture of LQDT. We'll unpack their business model, look at the financials, the trends affecting them, big picture and small, and even touch on technicals and risks. By the end, you should have a quick but thorough grasp of what makes LQDT tick. Let's jump in. So first things first, what exactly is Liquidity Services? How do they actually make money from, other people's surplus stuff?
Okay, so Liquidity Services, they started back in 1999, listed on NASDAQ. Their whole game is helping organizations, businesses, and government agencies manage and resell surplus assets. And we're talking a huge range here, not just like old desks. Think big industrial gear, vehicles, loads of consumer goods that got returned. They do it mainly through their online marketplaces.
Right, so they're the platform connecting sellers with buyers for this kind of stuff, not just a listing site though, right?
No, exactly. They run several key marketplaces. You've got liquidation.com, that's mostly for retail goods. Then GovDeals, that's a big one for government surplus. Really a unique angle they have. And for the heavy-duty stuff, industrial equipment, capital assets, they have Go Industry, DevBid, and Machinio. But the key thing, like you said, is they offer integrated services. It's not just the listing. They could do asset appraisals, handle logistics, marketing, customer service, the whole 9 yards. It's this blend of e-commerce and supply chain management. And it fits right into this big trend we're seeing, the circular economy.
The circular economy. Okay, let's unpack that a bit. What does that mean in practical terms, and how does LQDT play into it?
Sure. So the circular economy is basically the opposite of the old take, make, dispose way of doing things. It's about keeping resources and products in use for as long as possible. Extract the maximum value, then recover and regenerate products and materials at the end of their service life. Think reuse, repair, recycle. LQDT is like a perfect example. They take assets that might otherwise just be scrapped or sit in a warehouse, and they give them a new life, put them back into use. It reduces waste, boosts efficiency, and this focus on sustainability. It's becoming really important for companies' ESG goals, for governments. So it makes LQDT's services very relevant.
Okay, that makes a lot of sense. They've definitely carved out a valuable niche there. But how does this translate financially? Are they actually making good money from managing all this surplus?
Oh, yeah, they are. Financially, LQDT has shown some pretty strong growth on the top line. If you look at their revenue for the 12 months ending March 31st, 2025, it jumped to about $439 million. That's up almost 36% year over year. Pretty significant. And even more recently, their second quarter 2025 revenue came in at $116 million, which actually beat analyst estimates by quite a bit. So demand seems strong.
Okay, impressive revenue growth. What about profitability and, the overall financial health? Is the foundation solid?
Profitability is positive, though there are some details to watch. Their net income for the last 12 months was around $25 million, a margin of about 5.75%. Q2 EPS was 19 cents up from the year before, but it did miss analyst forecasts slightly. They were expecting closer to 0 and 30 cents. So strong growth, but maybe profitability isn't quite keeping pace with expectations. It's always good to double-check the latest SEC filings on earnings. But here's what really stands out on their balance sheet. Their financial health is exceptional. They had $149 million in cash as of Q2 2025. And get this, virtually no debt.
Wow, no debt.
Almost none. Their debt-to-equity ratio is just 0.08. That's incredibly low. Plus, they consistently generate positive cash from operations over $53 million in the last year.
Okay, that low debt and strong cash position, that's a huge plus. Gives them stability, options. How is that revenue broken down across their different business lines?
Right. It mainly comes from 3 areas. First, the Retail Supply Chain Group, or RSCG. That's handling excess and return consumer goods. Second is the government segment, think GovDeals, selling surplus for public agencies. And third, the Industrial and Capital Assets Group. That's the high-value stuff. Machinery, vehicles through Go Industry, DevBid, and Machinio. Geographically, most of the revenue comes from the U.S. right now.
Got it. Let's pivot a bit to the metrics investors really zoom in on, the ratios. What do they tell us about LQDT's valuation and maybe its efficiency?
Sure. As of late July 2025, their market cap is hovering around $770 million.
Hmm.
Now, the price-to-earnings ratio, the PE, is a big one. Their trailing 12-month PE is about 31. And the forward PE, based on estimates, is around 18. What's important here is that 31 is definitely higher than the average for the market or their sector. It signals that investors expect pretty strong future growth.
Right. A high PE often means high expectations baked in.
Exactly. And it raises the question, is that valuation justified? Especially when you look at their projected EPS growth, which analysts peg around 9%, slightly lower than the overall market expectation of, say, 13%. So that's something to weigh.
Okay, that's a key point. What about other metrics, like price to book or return on equity?
Yeah, their price-to-book ratio is 3.80, so it's trading well above its accounting book value. Price to sales, often used for growth stocks, is 1.72 on a trailing basis. Efficiency looks decent. Return on equity, ROE, is about 14% TTM, which suggests they're using shareholder money effectively. Return on assets, ROA, is around 5.8%. And again, just to hammer this home, that zero-debt situation is a massive strength. Plus, they've shown consistent growth, historically average revenue growth, near 10% over 5 years, and positive operating cash flow for 5 straight years.
Okay, strong track record there. And with all that cash flow, what about dividends? Are they sharing the wealth with shareholders?
Currently LQDT doesn't pay a dividend. All profits are being plowed back into the business, presumably to fuel more growth. That's pretty typical for a company still in a high-growth phase, or perceived to be.
Makes sense. Okay, let's zoom right in on the company itself now. What's been happening lately? Any specific news, filings, or developments investors should know about?
Well, the big thing on the horizon is their Q3 2025 earnings report. That's expected around August 7th. Investors will be watching revenue, GMV, that's gross merchandise volume, the total value of stuff sold on their platforms, and of course, EPS. Looking back, their Q2 results in May were strong on the surface, revenue up 27%, net income up 24%, GMV up 15%. But interestingly, the market reaction was a bit muted, perhaps because of that high PE we talked about.
Right, sometimes good news isn't good enough if expectations are sky high. Any other recent moves? Leadership changes? Insider buying or selling?
They did appoint Paul Hennessy to the board back in June, and that could signal, new strategic input. Now, insider trading, and this is something to note. Reports from places like Simply Wall Street and Fintel show there has been significant insider selling over the last 3 months.
Selling, okay, that usually raises eyebrows.
It can, yeah. It can be seen as a negative signal, suggesting insiders might think the stock is fully valued or maybe see challenges ahead. However, you have to look at the context. The CEO, William Angrick, who's also a co-founder, still owns a huge chunk of the company, over 21%. That shows very strong alignment with shareholders.
Yeah.
So while the selling is worth monitoring, it's not necessarily a 5-alarm fire, especially with the founders still heavily invested.
Okay, good context. So strong underlying business, but maybe some short-term questions around valuation and insider moves. Let's pull back a bit now to the industry level. What are the big trends in their sector?
LQDT is sitting in a really interesting spot, right at the intersection of several major trends. First off, the whole market for surplus asset management is growing, especially something called ITAD, IT asset disposition, basically dealing with used IT equipment. That market's expected to more than double globally by 2032, from like $18 billion to over $40 billion. That's huge growth. This directly fuels demand for LQDT's industrial and capital assets division, particularly for processing old computers, servers, handling data destruction securely, and reselling what they can.
And I imagine the general shift to e-commerce helps their platform model too.
Absolutely.
Yeah.
B2B e-commerce is booming. People are getting much more comfortable buying and selling valuable assets online. That naturally benefits LQDT's marketplace model, drawing in more users on both sides. And then there's the ESG angle we touched on, the circular economy. As companies get more serious about sustainability, reducing waste, being resource efficient, well, LQDT's whole business model aligns with that. That increases demand. Plus, they seem to be focusing on using AI and data analytics to get better at valuing assets and predicting market trends, which could be a nice competitive edge.
Yeah, it sounds like they're really positioned well against some powerful long-term tailwinds. Okay, let's zoom out one more level of the macroeconomy. How do things like global growth, inflation, interest rates affect LQDT?
Macro factors always play a role, right? The IMF is forecasting moderate global growth for 2025. For LQDT, growth is kind of a double-edged sword. Good times can mean more business activity, hence more surplus generated, but it also means more demand for used equipment. Slowdowns might mean less surplus overall, but companies might be more focused on getting value out of what they have, or buying used instead of new.
Hmm.
So LQDT has a bit of resilience there. Moderate growth, like we're seeing now, is probably pretty good for them.
Okay, and what about inflation and interest rates? That's been on everyone's mind.
Right. Global inflation is still elevated, projected around 4% for 2025. High interest rates make borrowing more expensive, which could dampen demand for big-ticket used assets if buyers need financing. Inflation could also increase LQDT's own operating costs. On the flip side, inflation might increase the nominal value of the assets being sold, boosting their GMV and fee revenue. But here's the kicker, linking back to their financials. Being virtually debt-free is a massive advantage right now. High interest rates just don't hit them directly like they hit indebted companies. That's a huge cushion against macro headwinds.
That debt-free status really seems like a superpower in this environment. So while macro is a factor, their financial health and those industry trends might help them navigate. But no investment is risk-free. What are the potential downsides here? What should investors worry about?
Definitely. Number one risk, I'd say, is that valuation concern we keep circling back to. A PE over 30 is high, especially if their earnings growth comes in closer to 9% rather than something much higher. It suggests the stock might be priced for perfection, vulnerable to pullbacks if they miss expectations. Another risk is profitability trends. While revenue is growing, their EPS actually declined over the last 3 years, and their gross profit margin has shrunk from over 58% in 2021 down to about 44% recently.
Shrinking margins. That suggests maybe costs are rising or they're facing pricing pressure.
Exactly. It could be competition, higher operating costs. Something is squeezing profitability relative to revenue, and that needs watching. Then there's the risk of an economic downturn hitting demand for used assets, especially the pricier industrial stuff. The insider selling, while we contextualized it, is still technically a risk factor to monitor, and competition is always there. Big players like eBay or Amazon could try to encroach, or more specialized niche players could emerge. Plus, being a platform means they always need to keep their tech updated and secure.
Okay, on competition, how does LKDT really stack up? If you compare them to others, maybe not direct clones, but in the broader, say, internet services space.
Yeah, if you look at their sector, you see companies like Opendoor and real estate tech, Ziff Davis and digital media, very different businesses. LQDT's strengths are really in its specialization, that massive range of asset categories, 600 plus, their long history, the network effect, 15,000 sellers, 5 million buyers, billions transacted. That's hard to replicate. And of course, the debt-free balance sheet is a huge competitive plus. Plus, GovDeals is pretty unique, giving them a strong foothold in the government sector.
Makes sense. And the weaknesses in comparison.
Primarily that valuation burden we discussed. The declining gross margin trend is a comparative weakness right now. And the insider selling optics, even if explainable, don't look great compared to companies with strong insider buying. So the takeaway is they have real strengths in their niche, but investors need to weigh that against the valuation and margin trends compared to broader market options.
Got it. Let's look at the stock chart itself for a moment. What are the technicals saying? Any clues from the price action?
Technically, it's been quite volatile. The 52-week range is wide, like $19 to almost $40. More recently, as of late July 2025, the price actually dipped after those strong Q2 earnings we mentioned. It fell about 2.5% down to around $24. That kind of price action falling on good news often signals that the market is maybe more worried about something else, like the valuation or perhaps broader market sentiment is just weak. And performance-wise, over the past year, LQDT has lagged both the S&P 500 and its specific industry benchmark.
Okay, underperformance and a weird reaction to earnings. What about specific indicators like moving averages or oscillators?
It's a pretty mixed bag there. Looking at moving averages, the short-term ones, 5-day, 20-day, 50-day, were suggesting buy signals recently, indicating some possible short-term upward momentum. But the longer-term 200-day moving average, that's signaling sell, suggesting the bigger picture trend might still be down or correcting. Oscillators, things like MACD, Williams per SAR, CCI, they were mostly flashing sell signals too. The RSI was more neutral, but overall more negative than positive momentum signals.
So not exactly a clear green light from the charts. What's a takeaway for someone looking at the technical picture?
Yeah, the technicals lean cautious, I'd say. That mixed picture, especially the weak price reaction to good earnings, suggests the market isn't fully convinced yet, likely due to those valuation or margin concerns. From a purely technical standpoint, you probably want to wait for a clearer trend to emerge, maybe see if it can break decisively above some resistance levels, or if the long-term indicators turn more positive.
Okay, so technicals are a bit murky. Let's wrap up by focusing on the core strengths within the company. What are the internal capabilities that really give LQDT its long-term edge?
I think there's several key internal strengths. First is the diversity of their marketplaces, and the sheer breadth of assets they handle. Those 600-plus categories mean they aren't reliant on just one sector. Second is that powerful network effect. Having millions of registered buyers and thousands of sellers makes the platform increasingly valuable and sticky. It creates a barrier to entry. Third, and we keep coming back to it because it's so important, is their financial health. That zero-debt balance sheet and strong cash position provide incredible stability and flexibility. They can weather storms, invest in growth, maybe even make acquisitions without being constrained by debt payments. Fourth, leadership alignment. Having the CEO as a co-founder with significant skin in the game, holding over 20% of the stock, that's generally a very good sign for long-term commitment. And finally, their ongoing investment in technology, using AI and data, should help them stay efficient and competitive in pricing and managing assets.
Right. So even with some external headwinds or valuation questions, it sounds like the internal engine is pretty solid. Okay, as we bring this deep dive to a close, what's the big picture view? What are the final thoughts for our listeners, especially those American investors tuning in?
Looking at everything, LQDT offers, I think, a pretty compelling story. It's an interesting mix of growth potential and what seems like reasonable risk, especially given the financial health. You have a strong, unique business model tapping into major trends like the circular economy and ITAD growth. And that financial stability, the zero debt, is just a massive plus. But investors absolutely need to keep a close eye on a few things. Can they sustain the growth needed to justify that valuation? Can they stabilize or improve those gross margins? How will competition evolve? And what's the story with that insider selling? Overall, I'd say LQDT is probably best viewed as a potential long-term growth play, assuming you're comfortable looking past some short-term volatility and those valuation metrics. As always, diversification is key, and the next big checkpoint is those Q3 earnings coming up around August 7th. Watch the GMV, watch the profitability, maybe see if there's any more insider activity reported.
So, the final question for you, the listener, to mull over. With its unique spot in the circular economy and that rock-solid balance sheet, could LQDT quietly become a powerhouse? Or will the valuation hurdles and margin pressures ultimately cap its ascent? Definitely something to consider as you do your own research. If this deep dive was helpful to you, please subscribe to the deep dive for more insights and analyses.